In the first one, we invested in 21 companies, and more or less we will do the same with the second one. We still want to do small tickets, but the market has changed and evolved, and the rounds are bigger and bigger, even for pre-seed rounds. So now we will be investing between 200 and 500K, and we will be able to go up to 1.5 or 2 million euros.
Welcome back to the show, almost a year later. So happy to have you. Today we're here to announce the big news, the first close of your new 25 million pre-seed fund. Congratulations. How was the fundraising?
Fundraising was fun, exciting and exhausting, I have to say. It was a 1.5 year process. It was highs and lows, but I'm very glad we made it with a team. It's really a teamwork, I have to say, not only internally, but also I think it takes a lot of cooperation with our partners and existing LPs, long-term relationships in the area, and our, let's say, co-investors.
If we think about the progress in the first fund, what are some of your key learnings from investing in as a first-time fund manager?
First, I would say the ecosystem, Makesense ecosystem, which is a non-for-profit ecosystem, is a huge strength for us. We have always used investments as another tool to accelerate social and environmental transitions. And I think that has been very helpful. First, as you said, we have also incubation programs. So that's a great deal flow pool for us. And we invested in 5 companies incubated by this incubator in our first fund. So it was a good Kickstarter, let's say. Second, we had a very small fund because it was a 8 million euros fund, and I think it was really smart to have a small fund to start, which was very I think it fits when you do pre-seed investments, and it also enables you to really invest in pre-seed round, like small rounds. And we see it today, there is fewer and fewer pre-seed fund because there is much more money on the impact investing market, but that leads to big Series A, Series B fund, and there is no more pre-seed fund. So that's a learning that to really be a good pre-seed investor, you need a small fund. You don't need a big fund, and that's why we decided to raise another fund like lower than 25 million.
Yeah, that makes sense. And for the new fund, is that the same kind of strategy? So small tickets, lots of companies, 25, 30 companies, a bit more maybe?
Yeah, in the first one, we invested in 21 companies, and more or less we will do the same with the second one. We still want to do small tickets. In the first fund, we started with 100K investment ticket, but the market has changed and evolved, and the rounds are bigger and bigger, even for pre-seed rounds. So now we will be investing at first in between 200 and 500K, and we will be able to go up to 1.5 or 2 million euros, like on following rounds.
When we think about the fund structure, curious about, you have these theses that performance is economic but also social and environmental. Is that the same strategy for fund too? You go after the same target?
We have always been working on how to scale up solutions to meet fundamental needs for everyone. It means access to sustainable food, access to housing, access to a good education. So it's very wide in terms of social needs we need to meet while respecting the planetary boundaries. So that's the same strategy. But with the experience, we have understood that circular business models are one of the most relevant type of business models to be in this safe and fair space for humanity, as described in the theory of donuts, um, in between social foundations and environmental boundaries. So that's the same strategy, but which let's say a more precise focus on inclusive circular business models.
Can you do circular business model for social impact?
Yeah, absolutely. That's a great thing about circular business models. They have the capacity to decouple the economic value creation from the extract of new virgin materials and generation of waste, but they also have the great capacity to make goods more affordable for everyone. Like if you take secondhand clothes, but also as you need to touch products. It's not manufacturing products, but it's reconditioning, maybe repairing. You create a whole new side for the economy and new employment opportunities for many people. So it's about reskilling, training, employment for everyone.
Yeah, that makes a lot of sense. Well, look, one of the questions I had for you, obviously, is how do we go from a 8 million fund to 25 million? I mean, as you said, it's still relatively a small fund, but it's still almost triple the size. Probably not an easy task. How did you go about fundraising?
Yeah, so first we worked with our existing LPs. For example, EIF came with a 4 million euros tickets in the first fund, and now we'll invest 15 million euros. Same for Banque des Territoires. So we worked closely with them and we built trust. Both of them, for example, are in the advisory board of the first fund. So they know how we work, they know our portfolio, they know how we invest and collaborate with the funders. So we build trust. And I think that's why they're following us on these second adventures. And then we went from two business angels joining the adventure, maybe crazy ones, but they were brave enough to try with us, and now we will have a dozen of business angels and family offices. They are investing in the space. They know us as co-investors. So again, they know how we invest, how we work with the founders. We build trust, and they saw our authenticity maybe in our approach, and I think that's what we managed to do. And maybe last thing, and I talked about at the beginning, it's cooperation. We are many good impact investors in the area. We need to be many because we have small pockets. So we need then to co-invest and to have strong, smart co-investor with us. So I think cooperation for us has been key. We have shared best practices, potential LPs with our friends, with our co-investors.
Yeah, and I think that's what's very special about the impact space and climate space in general is that a lot of people collaborate. I don't think that's true of traditional VC, to be honest. One of the things we talked about last time is that for that new fund, you wanted to have a small 10% pocket to invest in NGOs and association. Like, is that something you will be able to do?
Yeah.
Crazy.
We managed to secure this pocket, and I think it's key first because the ecosystem needs this non-for-profit and cooperatives, and we will be able to support them and to finance them. And second, because we are working a lot on the profile of risk and as a capacity of the portfolio to create value. So that's also one way to reduce risk and to build a robust portfolio.
How does the economics work for an NGO? I mean, like, I wouldn't expect an NGO to return twice the money you've invested.
Well, so the fund is held by the NGO,
Hmm.
Makesense, and the team. And the specificity is we are redistributing the carried interest we get to the NGO.
Mm.
But then the structure is a normal one, like a market practice standard structure with a 20/80 carried interest mechanism. So we are targeting a 10% financial return,
Hmm.
which is maybe lower than what some funds are selling. But when we see the numbers, that's quite high. And we are on track with our two existing funds to reach this target. But we are not chasing the unicorn here. We are really working on making the best of all the portfolio companies we invest in and generate economic, environmental, and social value with all of them. So it's and to do that, we never invest without supporting operationally our funders. So we have our own internal operating team, also supported by experts and like on circular economy or circular production models, for example. But every time we invest, we have the investment team like representing Makesense in the board, working on the strategy, working on the equity story with the funders, and we have the operating team working hands on hands with the funders to deploy operationally the strategy, like the development strategy.
And you can do that because that operating team sits in Make Sense, the foundation or the NGO,
Yeah,
and not in the fund. Because, like, obviously, with like a 20 million fund, otherwise, how would you have an operating team? I mean,
yeah.
it's hard to finance.
Yeah, that's the magic of our system. We benefit a lot from the ecosystem of Make Sense. We exactly what you said. The operating team is also sharing resources with the incubation and acceleration programs. And as an NGO, we also benefit from subsidies, European subsidies, to help build the impact ecosystem. And so that's why this hybrid business model of Make Sense is also very robust and enable us to create value.
When we talk about robustness and resilience, maybe, I remember last time we spoke, you had three companies that went bankrupt out of 21 investments, which I thought was quite remarkable for a pre-seed fund. Where do you stand today?
So a year later, one more business went out of the market, but it's still less than 5% of the fund we invested. So the write-off are quite limited because we didn't reinvest in these companies. And in addition, we had additional fundraising from our portfolio companies, enabling us to do some good markups on valuation and enabling these companies to secure a good financing strategy for the next step in the scale up. For example, Resortex just announced a 6 million Series A with international investors. Same for Vesto. So that's good news. And we did one partial exit with Vesto Investments, like Vesto fundraising. So yeah, we are on a good track. Let's say we have 4 more years to disinvest this portfolio.
How do you structure like a pre-seed fund? Like, do you try to get out at partially at the seed and Series A and so on, or do you like hold on to it all the way through the exit? Because that's a very long time usually.
We work on two different exit strategies. The first one is, I would say, the classic one, the one we thought at the beginning of the fund will be the biggest one. It's M&A strategies. We are having M&A discussions with players, French players, but also European players willing to come to enter the French market. So it's a very long-term relationships we are building with them, and some conversations are ending now. And on the other side, we are more and more working on secondary exits because, as we said, markets evolved the past years. There are more and more funds for impact investment, but bigger and bigger funds also. So we have more Series A, Series B funds able to invest in later stage than us and able also to do some secondary investment. So that's the other strategy we're working, and that's why partial exits are possible for us. So as we target to return twice our funds, that can help to bring some liquidity to build our DPI. And we are there for a long time. We are very passion capital, even if we have a 10 years structure. So that's why it's now and the coming 4 years. That's where we will build the value of the portfolio.
Yeah, that makes sense. And what's interesting about that is I love how you have a very clear strategy in mind. Because what I find in venture, what's interesting is it all looks good on the Excel file, but then if you don't kind of apply the real strategy you had in mind, it's very difficult to get there. So I love that you have already in mind, okay, I'm going to sell some secondaries. I need to return basically 16 million in total. So like that's how I'm going to get there.
That's the theory. And
That,
then we are adjusting also with the
of
market
course.
evolving a lot and quite fast.
Well, you've also announced a first deal, a company called United Repair Center, which is also outside of France. I don't know if it was the first one. Was it?
No, it's
No.
not.
Okay. What was the investment rationale behind this deal?
Yeah, I think this company illustrates perfectly our inclusive circular economy thesis. It's a Dutch company which is building a network of repair centers. And so they have a first workshop, repair workshop in Amsterdam, a second one in London, and they are opening in Paris, the third one in February. In addition to the environmental value and environmental sense of this Reaper business model, which I like, is that they are really focusing on how we can train, recruit, and help people far from employment situation to get back in the game, and especially migrants coming with very strong repairing skills from many different countries. So there is this double, triple actually capacity to create value, economic, environmental, and social value. So that's the perfect illustration with two very strong founders with a vision, with also a capacity to execute and deliver, with an entrepreneurial background. So I think it makes perfect sense to invest in this company, and I have been investing a lot in circular textile business models the past 10 years, and I think they really cracked something when most of them failed.
Super interesting. Well, best of luck to them, although it's only the beginning of the journey. Look, a couple of few questions to end up today. One of the things I wanted to explore with you is what are the type of feedbacks that you've received from LPs when trying to raise? And maybe a follow-on question on that is like, what would be your advice for people that are trying to raise an impact fund right now?
I guess to talk about the negative feedback, I have to say that it's not easy to sell a impact pre-seed fund at the moment with a team coming from a non-profit organization. So it can be quite funny.
But you did it.
Yeah, we did it, but it can be quite funny when when you hear this kind of positioning at the first time for LP. So the first feedback is always that might be very very much risky. So every time we really explain how we manage this risk return impact triangle, and as I said, we work a lot on reducing the risk with the operating team, with this 10% pocket for more liquid financing tools. And then we show our portfolio, our existing portfolio of 40 amazing, impactful companies. And I think that's the best flagship. You can have a perfect, well written impact strategy, but if you don't see it in the portfolio, you won't make it as an impact fund. I mean, so that's also where you build trust in the relationship, and it's very long term relationships, and that's I would say another something I learned and an advice I can give. It's really long term relationship. We started to raise this fund basically 7 years ago when we raised the first one, and we are starting to raise the third one. That's really long term relationship. And the last thing maybe is we never gave up on our conviction. A small fund for pre-seed, a very impact focus on circular economy, where it's not easy to find investors with the understanding of the specific opportunities and challenges of circular economy. But we never gave up our conviction, and we walk the talk in what we do. So yeah, I think that's the best thing we did, and that's really enabled us to make it.
Well, Luke, thank you so much for today. One last question for you. What does the future of Makesense Invest look like?
Oh, we have many ideas, but I would say we will keep using investment as another tool in our pockets to accelerate social and environmental transitions. We are building this continuum of support and financing funding for social and environmental innovations. We will keep doing that, but there is also existing impact companies that we can support. We already support them with our operating team on the operational side, and maybe at some point we'll have like a fund to finance these sometimes transfer phases of these existing companies, or financing takeovers maybe. I think it's key to build the innovation, but also to strengthen the existing uh, ecosystem.
Yeah, that makes sense. Well, congratulations again. I'm glad
Thank
we
you.
had this conversation. And then best of luck for the deployment of this fund.
Thank you very much.